Welcome to the discussion video on the module Balance Scorecard. During the last discussion videos, we have introduced yung responsibility accounting and responsibility centers, the concept of responsibility centers um, to pinpoint whether the performance is better, whether the performance of a particular center, whether it is cost, profit, revenue, or investment center is. For this module, we will be able to identify um, performance measurement tools and are we looking at overperformance? Are we looking at underperformance or performance at an acceptable level? So we will be dealing at the performance measurement, the rewards given because of exemplary performance, and the scorecards used to identify uh, over and under performance. So let us look at how uh, we identify it. So we measure performance based on the mission and the vision of an organization. So the mission statement expresses the purpose of the organization. Same is true, the value statement reflects the organization's culture. So it is noted that without short-run success, there will be no long-run success. Without long-run planning, short-run success will probably fade rapidly. So the indicators of the performance measures is used to implement strategies that apply resources to activities to gauge the effective and efficient use of organizational resources or to measure the efficiency and effectiveness to provide proof of a firm's competitive advantages, to enhance the organizational communication, to motivate managers. Because if you measure their performance and then you eventually reward them or to admonish them, you are looking at monitoring and motivating the performance of managers. To implement organizational control over activities and then you evaluate comparative managerial performance across the organizations. Okay, we are looking at how the factors are employed using the internal and external factors. Like in the internal factors, we look at the production, the performance, our employees. The external are our investors and creditors and our customers because this is interrelated in the concept of a balanced scorecard. Designing a performance measurement system, we must look first at the mission and the value statement. We identify our goals and objectives, and then we identify how do we measure it, and then we evaluate the performance of the managers or the responsibility centers. We assess the progress, whether it is through the financial performance measure, customer satisfaction, the quality of the products manifested by zero defects, the lead time to market, the delivery from warehouse to the market, and the social responsibility or efforts, the CSR activities that will enable to put the corporate image into a favorable position. Awareness and participation, we look at how the standards are communicated to those responsibility centers because the responsibility center should be aware of how their performance are measured. We look at the tools for performance if there are adequate equipment because if there is no adequate equipment, resources, and information, they will not be able to, it will serve as a bottleneck for them in accomplishing their tasks and their responsibilities. We look at the feedbacks as a continuing basis to avoid surprises, and we look at the feedback to provide for short-term financial measures. So, the concept of analyzing the financial performance is because of the measures like divisional profits, achievement of budget objectives, and variances from budget or standards, inclusive of the cash flow, of course. While we look at the short-term financial performance, one responsibility center is responsible for the profits of its own responsibility center, One responsibility center is responsible for its budget, whether it will be generating a favorable or unfavorable variance. We look at the responsibility center uh, when we are looking at the cost center, we look at variances. When we look at revenue center, we also look at variances by comparing budget to revenue. While in profit and investment centers, we look at variances, but there are some other items that we will be we will be spending our focus on, like the return on investment, the residual income, and economic value added. For the computational part of this video, I will be providing the formulas needed and the computations on problems involving investment centers, because the investment centers are involved into the application of return on investment, the residual income, and the economic value added. So for this module, we will be focusing our attention on the balance scorecard per se. So this is the formula for return on investment. This will be discussed on the computational part of the video. Return on investment, residual income, economic value added. But if you have time, uh, you can look at how the investment center is evaluated based on these measures: the return on investment, residual income, and the economic value added. Okay, now let's go with the balance scorecard. Okay, let me just emphasize this: there are financial measures, and there are also non-financial measures in the performance of the responsibility centers. Okay, let's proceed with the discussion on the balance scorecard. So the balance scorecard, before we look at the four perspective, which is the concept of the balance scorecard, let us stream down why it is called the balance scorecard. So when we say scorecard, it means you are grading or you are rating something. So in this case, you are rating or grading the operations of a particular responsibility center or a particular division or a particular department. So kaya siya scorecard. So kaya naman siya balance is because you are looking at the financial and non-financial measures of an organization. So dapat balance, hindi lang one aspect of an organization ang titingnan. That is why kaya siya tinawag na balance scorecard, because of it is rating a particular division or unit at a balance means of rating a department. So how do we identify balance? When balance is balance? According to the balance scorecard rule, we identify the four perspective. One is the financial perspective, second the customer perspective, third is in the internal business perspective, and fourth is the learning and growth perspective. In the CPA board exam, normally the balance scorecard concept is a conceptual question. You will be asked on what perspective will that particular scenario fall under the balance scorecard rating. So let us just analyze the basic assumptions when we are looking at these four perspectives. Financial perspective, we are looking at the income, the profitability, anything that is numerical and can be quantified falls on financial. So when you are looking at how a segment of an organization is operating, you are looking at the return on investment, the return on asset, the segment margin, the profitability index of a particular segment. So that is the financial perspective. However, under the customer perspective, you are looking at customer feedback. You are looking at customer satisfaction as a measure in identifying whether the customer perspective uh, is favorable, or the customers are looking at the company at a favorable manner. Next is the internal business perspective. Under the internal business perspective, some other books refer to this as the internal process. So the internal process means the quality of the products, the delivery of the products, the lead time to deliver the product, because that involves the process. The process of delivering a quality product to a customer refers to the internal business perspective, or the internal process. Anything that is any process that is within the organization, and any process that is within the organization that is needed to deliver a final output to the customer is part of the internal business or internal process perspective. Next is the learning and growth perspective. The learning and growth perspective, under some books, it refers to the growth of the employees in the organization. The learning of the employees in the organization, while some other books refer to the learning and growth as referring to the product itself, the growth of the product in the market. So whether it is the employees referring to, or the growth of the products in the market, this refers to the learning of the company towards its, maybe its employees or its products, and how the company looks at innovation, looks at innovation on the product or the employees to make the 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 to deliver a quality product. But we look at the innovation, learning and growth. The key term here is the innovation, the empowerment of the employees, the innovation on the products, and the empowerment of employees. Okay, there are some measures of financial in nature, let us look at this. The financial measures under the balanced scorecard: shareholder relevant issues, profitability, organizational growth, market price of stock. Customer is on lead time, quality, service, and price. The internal business is process quality, yield, cycle efficiency, time to market, on-time delivery, and cost variances. The learning and growth, the innovation, kaya nga merong involve ang research and development projects, time, the percentage of capital investment for high-tech products. Just take a look at this. Yung organizational growth na tinutukoy dito is it is quantifiable, yung kaya siya nakasama sa financial measure, because the organization as a whole can be measured on its growth, while ang tinutukoy na growth dito is the employees, the employees and the innovation on the products, which is more of quantifiable, or more of a qualitative factor, not quantified, kasi kapag quantified, it falls mainly on the financial perspective. So the challenge for managers here is to identify uh, which aspect or perspective does the company falls behind, kasi dapat yun ang bigyang focus when we are deciding. Remember, under the concept of managerial accounting, you are looking at the operations at the managerial's eye level. So I think that's more of the concept of the balance scorecard. Some items uh, here are for your reading. More of the discussion will be on the next part, which will be focused on the discussion on the return on investment, residual income, and the economic value added as a measure of performance and as a measure in rewarding the performance of a particular responsibility center. So I think that ends the discussion on the balance scorecard. Please uh, look at the next discussion video for the computational part of the performance measurement. Thank you.